Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Let me display the PowerPoint presentation and explain the Asian Session Live Market Analysis webinar. So this is the forecast analysis for the particular week, 9th to 13th of July. So we are on 9th July between 5 and 5:45 GMT. I will try to explain to you or give my analysis pertaining to what happened on Thursday and Friday of last week and what could be the possible moves during this particular week. So first of all, let me explain the derived forecast. The derived forecast was expecting the gaining moves on Thursday and Friday, last Thursday and Friday. Thursday, when the BOE and ECB announced the interest rate decisions, actually there are not much of a gains in the case of Euro and GBP, but they briefly gained and then started making the slide and continued the slide on Friday after the non-farm payroll, which was slightly less than that of the expected. But still, they made a big drop in the case of Euro and GBP, and especially in the case of Euro. And people might be wondering why such a big drop happened in the case of Euro. And even when they were highlighting the European crisis, the Spain and Greece crisis, we did not see that big drop in the case of Euro. But when non-farm payroll was announced, and there was a big drop in the case of Euro. So if you could just reflect on that, you'll be able to understand that was on Friday. And also, predominant of the traders were holding long positions. So the players showed the way as the risk aversion and started making the big drop. And you will be wondering, when the market was dropping, everybody was willing to sell. Somebody was buying it at the lower level. We can give the assumptions that those who had taken the sell position, probably they could come for buying. But all were willing to sell. So why such traders should come for buying at the lower levels? If it was questioned that, you'll be able to understand that the players created the market sentiment, even though the market moved against that forecast expectations on the downside in the case of Euro and GBP. So they breached and formed the earlier lows and formed new lows. They formed new lows, so which has created more fear and also added fuel to that of the fear that further drop is imminent and probably Euro could go to further lower levels. But if you refer to that of the earlier such moves in the case of Forex market, and you know that Francis, the owner of FX Street, has made a remark in fxrate.net whenever he is visiting New York or US, the Euro came down to the lowest for the season. But subsequently what happened to Euro, if you notice it, then it has formed a higher high. So the greater the drop, the greater the rise you come across in the market. So that is very practically we can explain it with the help of a simple chart. And whenever the drop is sluggish, then the rise will also be sluggish. Whenever the drop is great, then the bounce back effect will also be very great. And one such bounce back, they had done it for the month end and the new month beginning. Month end they just dropped Euro and then subsequently gained the levels of 250 pips. And last month end, and then subsequently from last week beginning, that is first week of July, they just made the drop in the case of Euro. It doesn't mean that Euro is expected to continue to drop. See, this is the way they try to create the market sentiment and act against that of the traders. So just because it has formed the new low, it doesn't mean that it will stay there forever. And if we just reflect in the case in 2008 that euro formed the new high, but it was not staying there. 1.60, it was not staying there. And subsequently, by February 2009, they showed 1.21. So the market is capable of making such big moves. It might appear very bullish and then suddenly make a great or a bigger drop, and it might appear very bearish and suddenly it could make unassuming gains. And this is how the market is being structured. So if you are able to understand how exactly the trades are to be set up, then you will not be afraid of such big moves in the market. And you know that players make such big moves in order to handle the derivative market during that last week of the month and the first week of the month. That is why you come across the monthly trend reversal moves. So that is why I was telling even the last webinar last week that the month end and the month beginning time, they're expected to make very volatile moves in the market, and we have to necessarily use the hedging order to limit the risk. In case if we use the hedging order to limit the risk, we'll find that if not the buy position, the sell position will be making profit. At the same time, it will not erode our usable margin. Then once we keep stop at entry in the sell position and wait for the market to recover, and once you understand that the market is on the uptrend, probably you can book profit in the sell side, or you can just stop it out at entry in the sell position and then continue trade with that of the buy position. At the lowest level, the players discourage traders taking a buy position. Similarly, at the highest level, the players discourage the traders taking the sell positions. So this is part of the market moves. So they try to make the stop ends, extended stop ends during that of the trend reversal time. When they frequently make downward stop ends, nobody will feel like making a buy there because they know it's for sure they are going to hit the stop. So they create such a type of feel in the market. And even though there was not much of the European crisis being figured out during that particular excuse for the market drop, and it is more of the US data and the expectations of QE3 and things like that, and they invariably give such analysis or the excuses whenever the market is in extreme level. So when it comes to that of the extreme level, the uncertainty level, then the media plays a vital role in exaggerating things, and probably even a person who is having a very strong mind might become jittery, and that is the objective of such making such analysis and also giving extreme calls, and probably they are doing their job. So ultimately, as a trader, we have to take our own decisions. That is very important. Not go with that of the sentiments created in the market, or not to go with it of any specific type of analysis and suddenly jump to some other analysis because it has gone wrong, and there if it goes wrong then jump back to another analysis. And if you try to do like that, our mind fail to understand the common sense and also understand how we have to do the analysis. Instead, we expect somebody to do the analysis for us and we try to follow it, and if it goes wrong, we tend to blame. So ultimately, if you have learned the technique of doing our own analysis and trying to read the market sensibly and try to trade and also use the risk limiting factors like hedging and stop, then we will be able to really capture good profit from that other market. And it is not possible to have profit in all the positions, but at the same time, we can see predominant of the positions make profit. And for that, we need to have a better understanding of the market. And on a daily basis, I am giving the focus and also giving explanations pertaining to that of the market moves in my blog. And those who are interested can follow it. And today, I will be giving the expected market moves for today and this particular week. Now, with regard to the market reading, this is the technique I already explained many times. So we make a note of the initial lows and the highs around 3:30 GMT in 4 majors and 2 commodity pairs and use them as a reference level because they are being used by the other players as the reference levels to make big moves in the market. And then we identify the type of moves they make in the market from time to time. So the forecast is a broader picture, but fine-tuned market expected moves can be derived from that of the market reading technique, identifying the type of moves, namely the stop point, whether it is breaching the initial low and coming above or breaching the initial high and going down in less than 30 minutes, or go up to that of the low and reverse, go up to that of the high and reverse as a false move. Then extended move, breach the low and stay there below there for 2 hours and reverse, or breach the high and stay above there for 2 hours and reverse as the extended move. And the intentional move, they breach the low and stay below for more than 2 sessions. And the start of the third session, they reverse the market or breach the high and stay above that of the high for more than 2 sessions and reverse during the third session. These are all the type of moves they do. Besides, during trend reversal time, they make the extended stop-ins on the downside as well as on the upside. So it depends upon whatever the trend they wanted to set in that particular month. So in the month of July, they started with a downward extended stop-in. Then you can read from their intentions that they wanted to make a big upward move. The trend is expected to be upward because they had done the extended downward stop-in. Why they had done the extended downward stop-in? First, because they just discourage the traders having a buy position at the lower level. Suppose somebody has got a buyer of 1.24 or 1.23, they just drop the market to 1.22 and create a big fear for him, even though he has taken near that of the low set for the season. He will become afraid and liquidate the long positions. Then the players buy such long positions or the liquidated positions and they do the lowest level buy. So they are the privileged to have the lowest level buy and the highest level sell. But as traders, when you try to do it, they will discourage it because of the money power. So that we need to understand, and we should not change our mind that we can do the lowest level sell and buy and the highest level buy and sell trade. That is how they induce every trader to do that. But our common sense says that lowest level buy will give a greater profit and the highest level sell will give a greater profit if you wait for a longer time as a position trade. But they discourage. But in order to avoid it, what you have to do is, when they make such quick downward stop and stop cutting the new low for more than 30 minutes to 2 hours or 2 sessions, then try to take a buy, still keep 30 pips hedging order and try to keep stop at entry. Then you will find they start gaining the level. So this sort of extended downward stop and or the precursor of the trend reversal moves. So we have to understand that extended stop-ins are used only during that of the trend reversal time. If you refer to that of the charts, when they have made such big moves, always it will be in the last week of the month or the first week of the month, not during the second and the third week of the month, excepting 1 or 2 cases wherein there were euphoric conditions or some breakout news, etc. Otherwise, they don't make extended stop-ins during that of the rest of the month. So now we are on the second week. So they are make the trending move. So we have to find out which way they will make the trending move, either on the upside or on the downside. Objectively, you can follow it. On Monday, they make the big beginning false move. If they dip today and understand that they are expected to make further gains or gain from the next day, Tuesday onwards during that particular week. If they gain quickly on Monday, then they are expected to make a drop on Tuesday, Wednesday, and if needed, they may just continue the drop or they may just reverse from Thursday and Friday they may gain the levels. So this sort of cycle market cycle, how they are doing on a weekly basis, we need to understand. And once we understand, we can follow their moves very easily and predict what could be the next type of move they intend to make. Based on that, we can take the trading decisions. So if you are afraid that no trading decisions will be correct, and you know that emotionally any decision we try to take it tends to be wrong. That is why most of the crimes in the world are being committed only during that such emotional stress condition. So emotionally, if we take a decision, and it will be biased and it is bound to be detrimental. So ultimately, in order to avoid such emotional grip, what we do is use the trading strategy. So the trading strategy is whatever be the type of forecast and also the market reading, we try to decide upon the entry and the exit, whatever be the type of analysis we try to do it, the trading strategy is a must. So in that, once we decide upon the entry level, say buy near that of the low or sell near that of the high, then keep the entry stop or the hedging order in order to limit the risk. So optimal distance from that of the position will be 30 pips, because normally they make the swings for about 18 to 23 pips. So if you keep about 30 pips hedging order or the stop, it will be wide. It will be fairly safe enough. And you can keep stop anywhere, even 100 pips, 150, 200 pips and things like that. But if you reflect on it, in case if they hit the stop first before giving profit, what will happen to our account? Then we will not keep such big stops. So it is not money management technique using a big stop like 100 pips, 150 pips, 200 pips, etc. Also, if you don't use stop, it is of the same effect. So ultimately, we have to use the stop or the entry stop, because our market reading can go wrong. So because we on a daily basis take so many decisions, we plan ourselves, okay, we will do certain things for the day. And as the day proceeds, we may not be able to complete all, and we might come across certain new things coming in, and certain things which we are given priority might lose the priority, and certain other things on a crisis management basis we might be doing. So as the situation arises, we should be in a position to handle them. And that sort of mindset is very essential. And if we have that particular mindset, then we will not be afraid of the market. And we only envisage something, and if it does not happen, then become upset. If we have a tendency of that nature, then market can continue to upset us. At the same time, we cannot escape from such incidences by avoiding keeping stops. So that is why many of the traders feel that because we don't have the patience to watch the market, and also we don't watch the market continuously, so they try to use a strategy of not using the stop. So if you try to do that particular type of trade without a stop, then when they make a big move like on Friday, or how they had dropped it, especially during month and a new month beginning time, our usable margin might be eroded greatly, because such moves are being done in order to hit the stops of, or in order to give the margin call for those who are not taking adequate measures to limit the risk, and also to handle the extreme levels in the market with regard to the derivative. So especially with regard to the higher level call and lower level put options, they try to trigger them. So they have a different purpose of handling it, and we need to understand. And if your equity is very less, the best thing is avoid taking positions during that last week of the month, and also the first week of the month. The rest of the days you can trade, and it will become very easy for us to trade. And after the impact of the last week of the month and the first week of the month. And when you try to understand that we can do a buy and sell trade, even technically, people hesitate doing it because of the fear what they have inherited from that of the previous week. So avoid inheriting the market sentiments from the previous day or the previous week or the previous month. And because the market does not inherit such feels from the previous day or the previous month, if you try to inherit, then you will find that invariably the fear continue to grip and the uncertainty prevails in the market. So now let me analyze the market reading with the help of the initial lows and the highs set for today. In the case of euro, the low was 1.2256 and the high was 1.2297. And currently market is trading around 1.2291. They are not breached the low or the high. And in the case of GBP, 1.5472 is the low, 1.5496 the high. They are not breached. And in the case of yen, 79.43 and 79.73 are the lows and the highs. They are not breached. And Swiss franc, 97.68 is the low, 98.00 is the high. They are not breached. And Canadian dollar, 1.0184 is the low, 1.0209 is the high. They are not breached it. Australian dollar, 1.0179 is the low, 1.0213 is the high. They are not breached it. So in none of the majors and the commodity pairs, they breached the high or the low for the week beginning. But if you see carefully with the help of the live market code page, let me give the link for the live market code page and also focus. The camera over that of the live market code page. Now you see that euro is staying closer to high with 5 pips positive net change, and USD yen is in the middle level, still closer to high and with minus 3 pips, and GBP is flat without any change, 54.87. And in the case of Swiss franc, it is showing 2 pips negative net change when euro is showing 6 pips positive net change. And USD CAD and Australian dollar are showing negative net change. When they show negative net change, we understand in both we understand they are handling the crosses for the week beginning. So especially the crosses, you find many of them are showing the negative net changes, and that is by showing the commodity pairs in both in negative net change. Canadian dollar is making USD weakening move and the Australian dollar is making USD gaining move. And when they make such moves in the market, understand that they are handling the crosses. It is the mid session, so they are handling the crosses. From 5:30 GMT onwards, they will come to that of the majors and start handling it. So we could see that they breached the high in the case of euro and GBP around after 5:30 up to 7 GMT. They could make the gains. So we can read it from their intentions by looking into that of the price action in the live market code page, because here we will be able to see pip by pip how they are making the moves in the market, rather than trying to wait for about 10 minutes or 15 minutes or 30 minutes to find out how exactly they made the moves. And that will be examining the past 30 minutes. Instead, if you see the live condition, how they are handling it, whether they are coming closer to low or coming closer to high, and what they are trying to do after reaching the high or the low, then you understand these are the reference levels the players make use of in order to make further moves during that of the day. If they breach the high and stay above there for more than 30 minutes, then understand that they wanted to make either extended move or the intentional move. If it is extended move, only for 2 hours. If it is intentional move, only it will happen for 2 sessions and start of the 3rd session. So you can just read from their price action how they intend to make the moves. Always they make a false move before that of the intentional move. If they want to gain the levels, they will make a downward stop and then gain the level. They wanted to make a drop, they just make an upward stop and before that before making a drop. So if you could understand how they are trying to act in a very cunning way on a daily basis, session wise, and every 30 minutes time frame, then look for such false moves. And then false moves can be easily identified that they are quick moves. If they quickly drop, then it is a false move. They quickly gain, it is a false move. You know that they gained about 250 pips last week in the case of euro to reach 1.27 as if everything is solved. And subsequently, what happened? They quickly gained, after gaining all the levels, they started building sell positions and dropping it. So this we need to understand. Similarly, the quick drop, they have done it, and you just see how intentional move is going to be a very slow gaining move during this particular week. And we might become extremely difficult, or it might become extremely difficult for us to change the sentiment. But the players create the sentiment and quickly change it using some other trigger factor. Let me go back to that of the PowerPoint presentation. I'll explain to you the expected market moves for today. Dip and firm up moves are expected during that of the Japanese session, and a rise and higher level swings are expected as an intentional move during that of the European session, and a small dip and then rise are expected during that of the US sessions. So it is the second week of the month, so week beginning false move may be limited to early US session. So they will just hold firm up slowly, and people will think that okay, probably market is changing the direction, and quickly they will make a dip. Then everybody will think that okay, we have to do sell and buy trade. Euro could go to 1.20 or GBP could go to 1.52 and things like that. After the drop, they will try to take a sell. Then they are expected to quickly rise the market. So let us see how exactly the market is expected to make the moves, whether it is in line with that of the expectations of the forecast or against. So we can just read it and fine tune it with the help of the market reading technique and try to use it as an input for our trading decisions. Now, with the rest of the days in this particular week, then tomorrow, 10th of July, they are expected to make very subdued, slow gaining moves, and from that of the late European session, they are expected to gain the level and hold during that of the US session. And 11th, Wednesday, this time they are not expected to make either way stop-ins, and they are expected to make a small dip during that of the Japanese session on Wednesday, and quickly gain during that of the late Japanese and the European session, and afterwards hold a higher level and continue to gain in a very big way on Wednesday. Then Thursday and Friday again, they are expected to make less drop and more gaining moves in this particular week. And as you know very well, with the history also, you can just refer and find out the greater the drop, the greater the rise they make. And the channel they have formed earlier, they breached the channel and come down, and they are sure to make an upward move to breach the high set during the recent time to go above. So after seeing it, probably you will be able to understand them. And again, whatever the observations you make a note of it with the date and also what are the type of moves they have done it, so that you will be able to reflect on that whenever they are making a big drop or a big rise in the market, so that you don't become upset or you don't develop the uncertainty, and you are able to read their intentions and find out, okay, and understand, okay, they are making a big drop to make a big rise. So after the drop, then I'll take a buy. They have finished it Friday because a lot of traders were holding long positions. They would have liquidated. On Monday, who is willing to sell at the lower level? And anybody who wanted to sell, if they ask, they will say, let them give a bounce back and then we will try to sell near that of the resistance. Nobody straight flat sell. And similarly, anybody wants to buy, they will say, okay, the next support is around 1.21 or 1.19. At time I will try to buy. So the traders will keep away from the market and watch for the directions. but the players make their cunning moves and try to make the slow moves. So during the slow move, nobody will be interested to do the breakout trade also, because the moves might look subdued and the market might look lackluster. So they may avoid committing positions, but the players continue to do the circular trades and gain the levels or drop the levels. And so that is the strategy by which the players are able to induce market sentiment. So even though the traders are all watching why euro is dropping, they do the circular trades themselves and drop the market. Similarly, buy their own orders from some other terminal and try to gain the market. This is how they do it. If we understand that, then we will not become afraid. So as I explained that Monday, today, they are expected to make the week beginning false move, dip during the US session start, and afterwards they are expected to gain the level. And Tuesday, Wednesday, they are expected to slowly gain the levels, and Thursday and Friday we could be able to see some visible gains. So these are all the expected market moves. So on a daily basis, we will try to do the market reading with the help of the initial lows and the highs, set info majors and two commodity pairs, and fine tune our reading and accordingly take trading decisions. So let me minimize the PowerPoint presentation and try to focus the camera over that of the live market code page and try to answer to the questions which are asked here. So if you've got any question, you can post it. I'll answer to those questions. Okay. Tony has got a question. Some brokers give freely the overall sentiments of their clients. Do you see this of any value? Trade again. See, they know very well that nobody has got a capacity or nobody has got a technique to find out whether all their clients are holding long and short positions. And there were several surveys earlier done and indicated the brokers say that we have got about 20,000 accounts and 50,000 accounts and things like that. And when they just estimated the actual positions taken from their clients and things like that, they showed, and there were reports that hardly they have few hundred clients having their accounts. And with the help of few hundred clients having that account, if they try to give whatever the sentiments, you can understand the value in it. And many of the brokers, they don't disclose the truth at all. And no, they know that they are trading against the traders. So when you try to open an account with a broker, the broker does not say that he is a market maker. And he may say we are market makers, but he does not give that explanation what is market making. They don't disclose the truth at all. This is a cunning way of earning money from their own clients. No? If they say that, okay, you open an account with us, we will be trading against you. Will anybody open an account? And later on, we see that the news spread and the traders come to know, okay, we will avoid opening account with that of the market maker. But still, those who do not know about the market making, what it is, they continue to open account and lose the money. And then we think that, okay, ECN traders or the players or the brokers are good. Then we open an account and try to trade. There again, the margin calls and slippage, all those things happen. And the spread might look is a fifth decimal spread about 0.6 or 0.3 and things like that. We might be thinking that we are in the safe hands. Whatever the manipulation the broker was doing in the market maker terminal, the same is being happening in the bank terminals. That's all. So they are trading against us. So ultimately, you find that whatever the brokers say, because they don't have the courage to trade on their own in the market to make money, to make their livelihood. Instead, they open the broking firm and try to earn the client's money. Why they are forced to do that? Most of the brokers, they start as a honest man, starting to open a trading account. But when the establishment cost go up, then they don't have any other thing rather than stealing the client's money. Why? Because they have to maintain their establishment and give the 24-hour service and provide their personnel in order to handle clients and things like that. They need people for marketing. That is why in a distressed condition, they go in for bonus opening an account. See, suppose you want to open a trading account with $5,000 or $10,000. If you are a broker, will you give even $100 or $1 to that particular account? Why you should give it as a bonus? You may say that it is a competition, out of that they are taking it. And earlier they used to say that it is the bonus straight away. Now with the rider that you cannot withdraw that. So every time you find that they give a statement and later you find there is a modification with regard to the statement. You can understand when they are giving the bonus of 50% or 100%, there are brokers, they say that you deposit 10,000, we will put another 10,000 in that. And this sort of things, normally the brokers do it in a desperate condition without understanding the client will think opposite to that of what they expect the clients to think. Because if you want to go to a shop and buy a commodity and you know that there are sales and you find the sale seasons, you come across the Christmas sales and things like that, you go there and find out a product which is valuing about $10 is being given for $5, you buy first time, second time. The third time you say that it doesn't even worth $5. So once you learn it, then you don't go for such practice. So these are all gimmicks happening in the market, and we have to read the true intentions of the brokers. But the brokers are inconspicuous when compared to that of the players. The players ultimately grab the money from everywhere. So do you see this any value in that? I don't see any value with regard to this sort of data release from various brokers. It may appear that they are given the truth, but not consistently. And you know that all over the world, wherever you open an account, people give the free calls with regard to the market. And even the banks give the free call. And especially when you deal with it of the banks, the bank dealer used to give the inside information. I am getting a lot of selling orders on euro. The dealer will say, and immediately the client will think that, okay, he is getting a lot of selling order in euro, so it is better to do sell and buy trade or avoid at least buy. Then you will find that euro dips about 20-30 pips and gain quickly. And if you call the dealer, bank dealer, and say that no, why euro has gone up, because you said that a lot of selling orders, and the dealer will say, yeah, I received a lot of sell orders and I executed it. I don't know why euro has gone up, and I don't know why that particular client has given so much of sell orders. You will just give all sorts of excuses. Now I get a lot of buy orders. So this is how they try to give the calls to that of the traders. And anybody who is trying to follow some other forecast, including my forecast, and there will be disappointments, and there will be uncertainties, or there will be fear. So ultimately, you do the analysis and try to take up and try to take the decisions on your calls. You will be able to see how you can handle the positions. And if you simply take some other analyst forecast, then there will be a lot of limitations. And that is why I give the forecast as well as insist upon the trading strategy every time. Then check out your outlook for gold. Yeah, gold is expected to go up, and we should see very soon in this particular month it is going about 1600. Then money magnet. Why does the market tend to trend in the last and first week of the month? As I explained, the trend reversals happen during the first week and the last week of the month because they need to handle the derivative markets, and also they have to realize the profit. They create the sentiment and act against the traders in the last week of the month in one direction, the first week of the month in some other directions. So this is how they make extreme moves. What they have been doing in 2 weeks, they just finish it in 1 week. And that sort of big moves, they make it in order to increase their earnings and also to handle the options and futures expiring. Then Jason, will the USD CAD follow uptrend move? Yes, USD CAD is expected to make an upward move, but dips are buy opportunities. When they are making a downward stop and try to buy, then they will gain above that of the high, book profit. Again next day when they make a downward stop and you buy and then book profit during that of the upward move. That sort of trades can be done in the case of USD CAD. Then Arun Kondil. Now about USD CHF and USD CAD for this week. And you see that USD CHF has come to about 0.98 area, and when Euro and GBP were gaining the level, they could go to 97 or 96.65 and things like that, and afterwards gain to 99. After gaining 99, they will go short of parity and come down, or just go above that of the parity and come down. The next time they will go above that of parity and do not retrace. That's how they had done it in the case of Canadian dollar. Those who remember it, they came down to 0.9798 and came up to 1.0010 and dropped it to 99 and come above that of parity, and they are not dropping it. And similarly, in the case of Australian dollar, they came down to 97 area and come up to 1.001020 and dropped and then started going above. And even though euro has come to new low, Australian dollar is not coming down below parity. So this is how they handle the market. And you'll be wondering, same US dollar sentiment, but it has given different impact to different currencies. So that is why I always say any event or news does not determine how much of pips it has to drop or how much of pips it has to rise. If anybody can do the calculation of that, it is all sentiment driven. It all depends upon the pending positions of the traders. If the traders are not liquidating the long position, they will show new lows. Automatically everybody will liquidate. So they know the trick of the trade. Ultimately the market is in their hand. Then Raymond, because players act against the traders, past, present and future, 90% or retail traders will always fail. It is not the retail traders alone, the institutional traders also lose. That is why many of the institutions have closed down in the past. Players will lose short term, but they are all smart, and long term they always earn from the traders. No, see, there are so many type of traders. It's not only the question of institutional traders and the retail traders. There are currency conversion traders. When euro comes to 1.22 or 23, lot of traders buy euro in their accounts, convert US dollar into euro and hold it about 2-3 months. And when it comes to 1.30, they convert it back. And there are so many traders who do that. And the players also do similar ways. So that is why they don't lose. And you know, a trader having a margin call, having an account of $10,000 or $30,000, even $1,000, when the margin call comes and if he loses the money, he feels very great. Imagine the player having billions and billions of dollars Can they afford to take the margin call? No. That is why they are acting so nervously in this market this way. Even though I have been talking about them for more than 12 years through various channels and including FX trade, but still they cannot go away from that particular strategy because they caught hold of the tail of the tiger. They have to continue to rotate it. They stop rotating it, the tiger is going to bite them. Yes. What can we expect for Australian dollar? Australian dollar currently showing 21 pips negative net change, and euro and GBP are showing positive net change. So it will be lagging behind today. Euro and GBP could gain the levels, and slowly Australian dollar is expected to gain. And later on, from tomorrow, you will be finding that Australian dollar leading the rally on the upside. And Tony, okay. And Jason, we have a good call in Euro GBP cross down to 0.79. Will it continue to go to 78? Yeah, it is expected to go to 78 area, and it will be swinging in the range of 79.50 to 77.50 for some time. Then they will focus on CHF. So Euro CHF, which is in consolidation mode, and they are expected to make the gains here. 1.30 level, 1.25 they could gain to, and you might think that it will be swinging in the range of 1.20 to 1.25, but straight they will take it to 1.30. How they had done it in the case of Euro GBP, and they have taken a longer time frame in the case of Euro GBP to bring it to 0.78 area. But in a shorter time frame, Euro CHF, they will do it because the volume is relatively less in this European cross, Euro CHF, when compared to that of Euro GBP. And also the pip value is very high in the case of Euro GBP. So there they have to handle it using a different strategy, but here they will straight away do it. And that is why you find that quick moves happening about 500, 700 pips gain in the case of USD CHF, but not in the case of Euro, because volume is relatively high in the case of Euro when compared to that of USD CHF. So depending upon the volume variation, they try to use modified strategies in order to earn and also in order to induce sentiment and act against the traders. So there are no more questions. So let me go back to that of the PowerPoint presentation. So I explained the expected market moves for today and the rest of the week. I'll just repeat: dip and firm up during that of the Japanese session. They could breach the high and go above that of the high slightly during the end of the Japanese session and quickly gain the levels during European session and make high level swing. Then they may come to that of the initial high or slightly lower than that during that of the early US session, and then start gaining the levels during that of the late US session. And tomorrow and day after tomorrow, they are expected to make subdued gains. And Thursday and Friday, they are expected to make more visible gains in the market. And then we will be able to understand the trend is set. But invariably, we must feel that we have missed the bus. And with regard to the initial lows and the highs, still they are not breached the initial high or the low in the 4 majors and 2 commodity pairs. And they are expected, it is 5:49 GMT now. They are expected to breach the high very soon. They have come closer to high. In a matter of another 5-10 minutes, they should be able to breach the high. And see, they are staying above there for more than 30 minutes. Then you can do a technical trade of buy above that of the high and then book profit during that of the rise. Then, now this week there is a change. So I'll come back again tomorrow, 10th of July, and do Asian session live market analysis, because Thursday on 12th I have some other work, so I'll not be able to present the webinar. Instead, FX Trade has asked me to give tomorrow during the same time frame, 5 to 5:45 GMT. So I'll do the Asian session live market analysis tomorrow as well, but that will not be recorded. So You have to attend it live and understand how exactly in the live market conditions certain concepts are to be understood. Then also on Wednesday, I'll be doing the Tracking the Forex Market Together twin webinar on 11th of July, part 1 by 8 GMT and part 2 by 14 GMT, 30 minutes from the start of the session. I requested for this particular time slot so that I'll be able to explain to you the basic trading strategy. How exactly you can wait for 30 minutes from the start of the session and then try to take the positions, and you will be able to close the position within the session. And those who have got very less equity, if you could learn the basic trading strategy and do it during that of the second and the third week of the month. The first and the last week you avoid, and second and third week of the month you choose either the European session or the US session and try to do the basic trading strategy. You will be able to earn easily in a day about 100 pips, and then stop with that. The next day you again wait for the session start time and do another trade. That way, if you do it consistently, you should be able to earn money. You will not be bothered about the big moves happening in the market. So on a daily basis, I will update it in the blog, iknowindustries.com/blog. There you can see the daily updates of my forecast. They are all nothing but the reference expected market moves, and you have to do the market reading for the day in order to perfect it. Then I take this opportunity to thank FX Street and also the team of FX Street people who are taking all the efforts to see that the webinars are conducted in time and also recorded and displayed for the benefit of the visitors. So it is up to the visitors to attend to all the webinars live or get it from that of the archives when they are given free. Sometimes when things are given free, we don't value it, and we have to find what is really worth learning. And because only when the learning is perfected, your trading can be perfected. So I take this opportunity to thank everyone who has come here to attend the webinar, and I hope you will come again tomorrow for yet another session of Asian Session Live Market Analysis. Thank you one and all. See you tomorrow.